The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on this 4th day of December. My pleasure to be here and just checking a few things. There we go. And Dow's down 321 at 25,503. Yesterday in Tom, when I was subbing for Tom, and I did the 2 hours, 3 o'clock to 5 Eastern Time yesterday, Tom O'Brien show, I was discussing three things. One was this pattern in the Dow. You see this lowercase h that becomes a lowercase m. I wonder if I've got it right here. Let me just check. Yes, in my CD introducing the Chapman Wave methodology, my CD book, available at TFNN, there's a pattern I call the dreaded h, lowercase h, which at some point can also become a lowercase h to m. In other words, there's one arch, finds a base, and then forms another arch, and that lowercase h becomes a lowercase m. So this is the pattern that's been concerning me in two ways. First of all, in the daily chart of a number of the key indices, you got this lowercase h, and it had this rally. The first one was the midterm election. That started off the trend line resistance, the downtrend line resistance, Chapman Wave inside track. These are the techniques I'll be discussing a week from Friday in my all-day webinar, part 1 in the morning, part 2 in the afternoon, practicing all these techniques, entry points and exit points. That's what it's called, entries and exits. Following all these different techniques. And then the trend line that we see right here stalled as the price of the Dow went just above the green line, the dashed green line, which is the outer perimeter of this inside Chapman Wave inside track repellent zone, but closed inside it. And I spoke yesterday and I said, if there is a decline tomorrow, rather than a move up above the high of yesterday, which was 26,980, I think it was, 25,980, if we aren't moving to the 26,000s very quickly, there's going to be this H that goes to an M pattern. That's number one. Number two is, within the context of looking at the midterm spike, that gap up high, it was way more than you would expect. And then Sunday night's huge move in the futures, up 500 more points in the Dow futures, 50 points in the S&P futures. That did all its homework in one swoop. And now we're pulling back sharply, fill the gap, gone underneath the gap on the 50-period moving average support. This is really negative action. And now brings me to my third point, which is the point I'll be making for quite some time here. You see the rectangle in the weekly chart. This is the Dow daily. This is the Dow weekly, Dow monthly on the right. I've been discussing the 26,616 high with the technicals all good in the monthly. This is L for the left side. On the right, it goes to a new all-time high just above the previous high. It goes to 26,951, October the 3rd. And what does it do? The technicals are very poor. The MACD is down, hasn't crossed negative, hadn't at that point, but the stochastic was just barely at 80%, not good. And now we're getting a test of that. That doesn't mean to say there's a failure pattern yet. What it does say is that all the contingencies that we were looking at to say, wait a minute, if your technicals aren't as strong when you're going to a new all-time high, shouldn't you be a little bit cautious? And that's basically what we're talking about. There is no sell signal even now in the monthly chart. But the weekly chart's sell mode, look at this. What we've got here is that rectangle with the lowercase h from the high of 26,600 in the Dow down to the 23,360, then retested in April, just a fraction below, made an H pattern. Then there was a fabulous rectangle and cup move towards the upside, breaks to a new high, peak G, pulls back very sharply, forms a trend line. And this trend line support is really important because it hasn't broken it yet. But this rectangle pattern is so far matching really well the pattern that we're looking at over here. And that's why I've circled it. I've rectangled it. If you look, I've got it here in the E-mini as well. Is this the show? I hope no, this is not. This is the E-mini, right? This is till December. I put this in and look at it. There it comes. Hello. All right, here it comes. So there's a rectangle in the E-minis, and we've seen the same sort of thing. And this E-mini didn't break the high of peak A right there. And neither did it when it went to the peak B. The big next rally didn't rally very strong. So far, everything matches. And once again, you've got the H pattern. Yes, there's a potential for a cup breakout, but you've got to decisively move. Yesterday, I said the E-mini has to go decisively on the S&P into the 2820s, close there. That'll be really important. That'll be very positive. Right, until we do that, this is a real problem. All right, enough already. Let's get to the others. SPX, S&P right now is down. S&P's down 44 at 27.46. It's the same pattern, of course, as the E-mini. There's the arch first H pattern. There's the second H pattern. Lowercase h goes to a lowercase m. Tonight, I'm doing my webinar, and I've been talking about this in terms of timing. This is not a timing to get a buy or a sell or anything in the market. This has to do with the sectors, which sectors are acting very well, which sectors still need time to consolidate, which were the ones that led the market all the way up to 2018 highs, and now they're acting very poorly, which are starting to act a little bit better. Where's Amazon in this whole thing? There are a whole bunch of things we're going to talk about. In fact, it's going to be less about the actual Chapman wave than how I'm applying the methodology to all these different things. What are the levels to look at for a breakdown in the Dow, the S&P, the Qs, the IWM, and what's on the upside? What breaks out? What's this? Hey, this is fantastic. Now we can start another big move to the upside. I think that's going to have to wait. What are we looking at in terms? Hey, let's go through this because I want to get to so much. Let's go through to the QQQ series, which had been the weakest link out of the sector since the IWM, the Russell 2000, led us on the way down. The Qs ran to 187.53. That's the NDX 100 trading vehicle back in October, and then it plunges down to 157.13. Let me tell you, a 30-point move in the Qs is this is a pretty serious decline. I don't expect this to be resolved in 2 months or 3 months. I think it's going to take at least another 6 weeks or more to resolve, to find some kind of a base. Now, so that's the Qs right now pulling back 1.75%. They're all more or less in line, 1.65, 1.75. IWM right now, that's the Russell 2000, is down 2.73. That was the weakest, that has been the weakest, and it's still acting the weakest. That monthly chart is in a sell mode. Nothing yet has even given me that. The Qs are very close to a sell signal in the monthly, but this IWM has already reached that level, and this is not good. At 149, the 144 support is just absolutely critical in December. I hope that can hold, but if it doesn't, it's a real problem. I'm going to put gold up right now. Gold, there it is. Gold is up 3.3. We'll talk about that because the dollar, funnily enough, up until this moment, has been holding pretty well. I'll be back. Basil Chapman, Time Conditions, our Dow's 400.
The TAS Profile Scanner is the most revolutionary piece of trading software that you will ever try. Wouldn't you like to approach the markets with confidence? As you begin your trading day, it's likely that you'll be faced with lots of decisions. In order to make the best decision, the first thing you'll need is a strategy that will help you minimize your risks. Whether we're in a bull or bear market, a good strategy is to have the tools needed to help you scan and analyze the markets before you trade. The TAS Profile Scanner instantly scans and filters over 2,500 global financial markets, such as stocks, ETFs, commodity futures, and Forex. Headed by Steve Dahl, president of TAS Market Profile, the TAS Profile Scanner understands that in today's technological world, the use of top-flight software applications, automated trading algorithms, and technical analysis expertise is essential to successful trading in today's market. Whether you're looking at the trade matrix, the ETF heat grid, the market breadth, the landscape charts, or the many other features of the TAS Profile Scanner, this is a piece of software that will revolutionize how you look at the markets and set up your trades. The team at TAS has even put together a 12-part video series to walk you through every aspect of the TAS Profile Scanner, which you can find directly on the TAS order page at TFNN.com. Sign up now for only $97 a month with a risk-free 30-day trial, so you have nothing to lose and everything to gain. See for yourself how you can harness the full power of the TAS Profile Scanner by visiting the front page of TFNN.com today, and you'll find the TAS Profile Scanner under the Services section. Remember, with a 30-day money-back guarantee, you have nothing to lose. Don't let another day pass you by without trying out this amazing piece of software that will revolutionize how you look at the market and how you place trades. Sign up today.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching Tiger TV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi, folks. So, look, as we're talking about, there was a flush to the downside. Oops, I didn't mean to do that. Get it back there. Okay. Look at this. The 10-minute E-mini makes a peak E back at 420 on the 1st. That's in the evening. Pulls back. Comes back down to the 27.67s. This is the December E-mini futures. Rounds up to a peak D, pulls back, and then goes to a peak F right there in the Chapman wave at 9 o'clock this morning. And that is right there is 27.8725. We are 40 points, over 40 points lower right now. Flush to the downside. Now, I'm looking out the window of my office, and I'm seeing something that I've actually got right down here in my webinar for tonight. This is, I'm talking about a period of excessivity. So, there's the inverted yield curve. I got a question about that. I'll be talking about that as well in a moment. So what's next for the market? This is a subscriber event to the opening call. We just got stopped out of our long position that we got real nice and timely, the second long position. And we're out now, so we actually have no longs whatsoever, except for the dollar long. We'll get to that in a moment. So what's next for the market? What sectors are we looking at? How long can this whole confabulation of tariffs and non-tariffs and this and that and yields, the whole aspect of yields is really quite important at this particular point, not for now, but is for the worry of the market. And lo and behold, I don't think I can find it right now, but in my sector that I always call excessivity, I mention a whole bunch of things, but then I also talk about overnighting a toothbrush. So I'm looking out the window and I see a guy that's parked there. It's probably an Uber driver, got a nice new car. I mean, that's how a lot of Uber drivers are doing it these days. They're paying for their car by Uberating. And what is he doing? He's got bounty and he's taking the bounty out the car and he's doing all sorts of things. And I see this at this particular place. This is the young couple across the street. The older folks have no idea about going online and just ordering your toothbrush. But I'm thinking, is that not excessivity? You've got packaging, you've got service, you've got transportation, you've got a whole bunch of things going on to get your toothbrush or whatever it is overnight to this little tiny packet. This is the period we're in. Convenience, absolute convenience, but it's convenience at an expense that we won't know what the real expense is for a long time. All right, enough with that. So gold is up 3.5 right now, 1243. There are two patterns. You know, I keep talking about patterns. If you have to invert this, I wonder if, let me just do this for fun right now. I'm going to open it up a little bit. You remember there was that rectangle I spoke about, and then we broke to the upside. I'm going to expand this a little bit, and then I'm going to do this. I'm going to capture it. Here it goes. Capture. Click. I'm going to do that. I'm going to cut it out, and then I'm going to post it over here. I'm a little slow because I've got almost every single program on right now. It's not a good sign because, and now what I'm going to do is I'm going to take it and I'm going to say, please do this once. Okay, do it again. Okay, yeah, one more time. And this is going to be quite interesting, and I'll tell you why if I can do it. It seems to be just a little, normally it's very quick, but I've asked it to do a lot. There we go. Okay, so cancel. So now I'm pulling this. No. Oh, I thought I would do it so quickly, and I haven't done it quickly. There we go. Flip. Left. Do it again. Oh, I'm not able to do that. All right, I'll do it during the break. I just wanted to turn it upside down to show you the techniques that I talk about. Look, the H pattern, this is now the cup pattern. And that's saying that gold, if it breaks and closes, let me do this later. Okay, above there, I'll do it because we want to do it upside down because I talk about that so much. The cup formation has the same implication, but it's upside down. And we'll do that in a minute. In the meantime, if gold is able to trade in the 1255 to 1263 area and then hold there into the close on Friday, that's going to say that is a significant change in trend, even if it's more shorter, not intermediate, but it's a pretty decent rally going in maybe most of December into early January, because look at this. The dollar, which is probably pulled back a little bit more. No, look at that dollar. It plunges early in the morning, just for the dollar's actual action. Early in the morning, it slumps. It goes all the way down to 96.50. Whoa, it went to 96.38. But right now it's trading in 96.89, above the 14-period moving, or right on the 14-period moving average. This is going to be very important because it's saying that that weekly chart, which is really still very strong, both now technically and in price, if the dollar starts to break down, I said yesterday, if the dollar starts to close for a couple of days, at least one day, and then follows through the next day with weakness below 96.35, kind of the low where it was this morning, and then at 95.85, if it can get there and then go even a little bit low to the 96.35 to 95.85, and then trade in the 95.70s or lower, that to me is going to weaken the weekly chart. And that's going to be important. Remember, I said WEAK to the WEEK. And that's really important. So what we're looking at right now is that the dollar's come back quite strongly. Not great, but it's really come back very well. But it's only a start. We need to see tomorrow. There's no trading. There'll be no TFNN. Just archives. Don't forget, tonight's my webinar. It'll be archived. It'll be on your page by probably midnight or so. By tomorrow, you'll be able to review the webinar. There's a lot of information. This is one of those where it's not you've got to get it tonight. You can get this a little later. You got a couple of weeks even. A lot of what I'm talking about is in play for the next weeks and maybe even months. So there's no real rush. Our positions, I don't feel in any. I said yesterday, we're in no position we have no need to jump into any long-term trades right now. It's just not important. There's going to be plenty of time. Okay, I haven't finished. Let's go to the silver. Silver is up. Let's see. It is up 0.09. This is a better action than it was yesterday. Now it's gone to a new leg B in the daily, but the weekly chart is still very poor. So I am saying to you, I need to see price movement in gold and silver on the upside and sustainable on a daily level. Like to yesterday and today's action sustainable. That's good, except you don't want to see the dollar acting well. The dollar right now should be in the 96.30s to the 95.80s. Copper. You're very worried about copper. Oh, there's no reason why I shouldn't be worried about copper. Look at that. Yeah, you got to be worried about copper. That's not good action. Let's look at wood, which is the iShares Timber and Forestry ETF. That, plunging down. Let's look at HGX. This is the home builders, and then we'll be back talking about Toll Brothers. I'll be right back. Dow is down 460.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Yes, this is the gold chart. Remember, I said it's a little easier. Sometimes some people are more used to seeing the arch than the cup. So here's the arch formation in gold. So if gold starts to take out this left side low, what's the rule of the Chapman Wave methodology in the dreaded H pattern? If there's a close below the left side low, you've got 2 bars in which to close above it. If you close above it within 2 bars, you can rally again. That, of course, is weakness in gold. If, in fact, you close below it for 2 bars, and the 3rd bar is even, you have not closed above this low level right here. This is the continuous contract in gold. That's going to be very bearish for this chart pattern, and we've shown it upside down, so that's bullish. And let me just go once again. We'll go to the gold. I have three things looking at the same time. Let me just do this. My charts, I've got too much up here. I hope it doesn't mess up because got that webinar tonight. GC, here we go. GC. So in other words, this high that was made in the continuous contract right here, that was on the 20. What am I looking at? Am I taking calls today? Yes. Oh, Greg in Austin. I'm sorry. Greg, hi, how are you?
I'm well. How are you?
Okay, let me just finish 1 second. Gold, yeah, the price that we're looking at, if gold closes for 2 out of 3 sessions above 1252.5, that's going to be very bullish for gold, and 1259 is the 200 period exponential moving average in the daily. Got it out. Okay. Greg, what are we looking at?
The TVIX.
So that's the TVIX. It's the VS 2 times VIX short term, and that's NASDAQ. Okay. So are you doing anything?
Well, I purchased a little bit yesterday, and then I added a larger amount this morning. And my plan earlier this morning, when it was just kind of going sideways, was just to take most of my profits at 40. But it's kind of on a roll right now, and
it is.
So my plans changed. So I'm thinking that I would take half and then wait for a pullback and then add that back. And it's at the looks like it's at the 200 on the 30-minute right now, and it's starting to take that out. So I was wondering what your take on that would be, and kind of help me out with my plan there. Take profits and then add back.
Two things have happened. One is you've been pleasantly surprised because instead of kind of going sideways, it's giving you an extra. It's actually giving you over a 1.5 point gain, more than you thought, right?
Oh yeah, more. Yeah.
Okay. So here we are. 34.21 was the low on the 11th of November. And it had come down from the 60 area, so it got almost cut in half. Then it rallied very strongly to the high of 54.56 on the 20th. And then yesterday it went to a lower low. It went to 33.86. And now it's trading at 41.47. So this is exactly what I was talking about. I mean, I couldn't have asked for a better example. I wouldn't have found it. You've just given it to me. This is the Chapman Wave methodology in progress, right as we speak. Because why? Yesterday it went under, but it closed above the left side low. The MACD is negative, and the stochastic was very poor, but a little bit better than it was. In other words, there was a divergence because the stochastic was higher yesterday, but the price was lower than it was back on that November 11th, I think it was. So that's a positive divergence, meaning that there's a good chance that if there's a deflection in a counterpoint, the opposite direction, it will be moving quite quickly, which is done. Now it's stopped at the 9-period moving average, just under the 14-period moving average. And this is what I'm going to say. A move of 560 points, just like in a blink of an eye, it's 3 hours, and we're down 500-something points. I'm going to say to you, I like your plan, because even though at 600 we could get a 2 for 1 day, we could get another 300 or more points to the downside if the selling really starts to increase. Because right now all that's happened is that everybody was buying Sunday night into Monday morning. All those profits have just gone. Right? So now there's a new bunch of buyers and sellers. So you've got a fresh start today, so anything can happen. I like your plan because it's kind of conservative, and yet you've garnered way more than you thought you would. I think you're right. Take off what you thought you would. And then what I would say to you is, I got a feeling that it's still going to be an ugly close on the day, because I was talking about this for a couple of days. Yeah, not a couple of days. It feels like a couple of days. It's only Tuesday. I've been talking about it since Thursday, Friday into today. I said, I'm a little nervous. I even wrote this to my subscribers. I said, there are just so many people that are talking about a fantastic December, or at least a big rally in December. Made me real nervous, even though we were long. I just didn't like it. So I'm going to say to you, good idea to keep that off, keep maybe a core position as long as you can. I got a feeling that even if there's a bounce today, this is setting the pace for a pretty shaky Thursday. So don't be greedy. Do it exactly. You got the position. Congratulations. You are thinking it through. Congratulations. I don't even want to get in the way of it because it's not my trade. It's your trade. I think you're going to know exactly what to do. You've already decided you have a strategy. I like your strategy. I don't really want to interfere with it other than to say that the idea of taking off profits, even though right now it looks like, wow, this VIX could go skyrocketing even higher. Let me see what the VIX is in real terms. The VIX itself is your root. Yep, it held that. Oh, I drew this in yesterday. I drew the support. It held that support. It's bouncing up quite strongly. I think you have got the plan. I would only say to you that don't take a loss on any part of your position at all because you've strategized it very well. At least raise your stop on your core position, no matter what happens. Raise your stop, and if it's even possible, even if there's a big turn to the upside on Thursday, if you can hold a little bit over into Thursday, into Wednesday, into Thursday, I'd say to you, not a bad idea. I think that was kind of your thinking. Is that right?
Mm-hmm. Yeah, I thought that, Thursday would be another down day for at least, in the morning. We're closed Wednesday. The markets are closed Wednesday.
Right, and if it closes lousy today, probably Thursday going to open lousy. Hey, nice strategy. Okay. I'm just going to say to you on the TVIX, because it is leveraged so highly, even as we're speaking, it's pulled back a little bit more than the price of the Dow going from minus 560 to minus 520 would imply. So yeah, I agree. Take something off and just treat it as another one of those trades. And congratulations, that's really nice planning. Good work.
Okay. All right.
Thank you for calling, and good luck with your trade. Let me know how it goes. Greg in Austin, Texas. So talking about Texas, of course, tomorrow we will be off, and in lieu of the market being closed in honor of the funeral of, is that the funeral itself? I believe so, of late President Bush. Okay, we've got the Dow down to 522, S&P's down 57. And there are a couple of things I needed to do. I'll do them during the break. Basil Chapman, Tiger Admissions Hour. Don't forget my webinar coming up tonight. Nice timing, I think, to start planning for 2019. I'll be right back after these messages.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foresight Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Hi folks, we're back, and yes, I've got in the den, we've got our Tiger, who's a Chapman waiver from the very beginning. He's my overseer, he's my governor of the Chapman wave, and detected once again, he saw that there was a little gray A right there in the gold chart. This is really leg C, not B. I'm still giving it gray C, even though we've just gone to 80%, which is the where I would start to turn it blue. And the MACD is good. Let's see what happens tomorrow. And now we're going to be looking at, once again, to see if the dollar's slipped, because you would think that the dollar would slide more. No, dollar's even stronger. Dollar's up 0.08. I have to tell you something. Someone out there for months, some big, not institution, some country is just buying the dollar. No matter what happens, they buy the dollar. All right. So we're going to be talking about that tonight as well in the in my webinar. 97.26 is my automated resistance levels, all the way 97.26, 97.68, 97.96 automated Chapman wave resistance levels, and the first one, the 120, is at 97.08. Oh, I wouldn't mind seeing it back at 97. Let's see what happens. So I'm going to be looking at, let me just do this now because of the sharp decline, if you don't mind. I'm going to go, there are so many questions. I have to get to everything. I've also got 2 segments. Here we go. So the Dow, what does it show? It shows 25,823 is resistance. And now the support level, I don't have any support levels at this particular point. S&P, SPX, these are the automated Chapman wave, automated projections. And we're talking about 27.86 was the resistance. Yep, we hit that. Now on the way down, I don't see any support levels. 263,623 in the monthly. I'd say that's a little bit way down. Well, we went to 26.03, I remember. So yeah, that's interesting. I had QQQ. Let's see QQQ. Let's see if that's got support. No, I don't see any support levels. And there was resistance at 172.12. It broke that by a fraction, and now it's down at 168.37. IWM, let's see if there's anything there. IWM is support levels 147, support 152.90 was the resistance. And let's go to gold and see what happens there. Gold is trading at up 4 now, up 4.5. It was up 5. Now it's up 4.5. Has a look at this, a whole bunch of 1248, 1247, 1251, a whole string of resistance levels to both magnets and repellent areas, and the high so far is 1247.5. Oh, it went to 1247, huh? Yeah, 1247.5. All right, let's get out. Oh, TLT. A whole bunch of things going on with the bonds. I'm going to do quite a bit of work on the bonds. TLT is screaming to the upside, up 194 at 117.82. It's broken all levels of resistance. Now the next level is up in the 119s, whole chunk in the monthly chart. Wow, that is impressive, isn't it? Okay, so that takes me to the TNX. Let's just do this live right now. So the question is, on the yield curve, What's the question? Paul wants to know if I can find it. Yeah, there it is. Could you explain what the inverted yield curve is and what it means for markets? The last time it happened was in 2008, just before the financial crisis and crash. So, Paul, this is basically what we're looking at. Here it is. Look, right there. An inverted yield curve is an interest rate environment in which long-term debt instruments have a lower yield than the short-term debt instruments of the same credit quality. This type of yield curve is the rarest of the three main curve types and is considered to be a predictor of economic recession. If you go to I don't have it in front of me. CNBC, there's there's a whole thing on bonds and the fear about the yields. Of course, there's always two sides to the story, but basically what happens is when the yield curve inverts, longer term yield tucks underneath that shorter term, you have anything from months to about a year or so before there's a recession. Now, you might recall that I've been talking about this all year. I'm going to talk about this again tonight. I'm going to make a big deal about it. Cintas, overalls, uniform rentals made a top back in September of 217.34. It drops a little to 168.02. In 2 months, it goes down. I've been talking about a rotational recession going on in various sectors all year. In fact, you can even think that the Dow, from its January high to its October high, was basically in some kind of rotating consolidation. You can even call it a little bit of not a recession, but a slowdown, right, in some of the sectors. But what's been really most important is if you look at the SMHs, semiconductor, I'm sorry, subscribers, I absolutely was going to put the SOXS as a trade this morning. I took it off completely. I just tried to think. I want to be clear-headed about it because Intel still had a little bit of support going for it, and it's kind of being representative of the SMHs. And now we are down 3.32 in the SMHs, down 3.35% really quickly. And look at Intel. I'm going to come back to this. I just wanted to say the semiconductors made its high in March, and I've been talking about this all year, that the semiconductors have the commodity of chips. Those chips are in everything. So they have to be affecting internationally areas that are seeing slowdowns. And that's what copper, that's what wood, WOOD, the timber and forestry ETF is telling us. There are slowdowns going on. And that's really important. So now I'm just going to show you Intel, just to show you another technique. This is a Chapman wave stalk leg formation. The leg, remember, the oval, nice long oval body, a breakout for the neck, and then a test of the beak that goes into where, and this is gray because it's way underneath the previous highs. It's blue, but it should be gray at peak C with a doji candle. And that tests, what does it do? It tests the high of the 49.60s or something, and we're trading right now at 48.63. So, yeah, a lot of things are going on. So talking about yields, here we go, the TNX. Remember, I do things circuitously or directly. Very direct or very circuitously, because I want to show the machinations. I want to show all the arms of the tree coming together for that big body of the tree, for the to see where things are coming from and where they're going to. And in this particular instance, the TNX, I'd said yesterday when I was asked about it, where do I think the TNX should go? And I said it could test the 2940s, which is the uptrend, the weekly red dashed support line in the up channel, the outside perimeter of the Chapman wave inside track propellant zone. And if it goes under it, and this is not even the full second day of the week, let alone coming to Friday. This is a weekly chart. This is a negative. The MACD is negative, stochastic is negative. And what I said, there was a peak G there. And if you look at the TYX, which is, this is the 10-year yield. If you look at the 30-year, which is the one that I used just for the big picture, it made a peak D at 34.55. It's trading 4 points lower. 4 points in bonds. On the downside, we've seen those big moves to the upside, actually even in one day. In 2 days, we've not seen a big move like this. This is a monster move. I think this is going to scare the daylights out of a lot of people with the wheels plunged so quickly. Crude oil has come down so quickly. Copper's down. I'll be back. We'll do a bunch of these questions pouring in right now. I'll be back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated folic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
So yeah, I would just I forgot to get that the chart, but it showed that the 2-year are just there's right now there's a flip in the yields. So this is why he has the 10-year. This is a 2-year right now. Peak C, and it's trading at 105.16. If it goes to 105, let's make it real simple. If it goes to 105.19, it goes to leg D, and that's the 2-year. So we're going to be watching this closely. And GT says 5-year US yield 2.8%, 10-year, 2-year yield gap smallest since 2007. Yeah, that's what I'm reading. This is the narrowest gap, so it's getting real close. One chart showed me that there's a flip. I don't know what it was. So yeah, this is just a moment of a little bit of panic because what was spoken about quietly has become kind of front page news. So it's all getting close to being not news anymore. I'll be discussing these things tonight. I'll be discussing the impact of why yields are down so sharply. And yet, let me see where Toll is. Finally, Toll came out with its earnings. They were lousy. The projected lousy. It went from yesterday's close in the 33.80 or something, 33.89. This morning, it opens. Let's see, it opens at, gaps down, opens at 31.14, goes to 30.17. That's a 11% decline, and now it's down only 0.86%, down 29 cents. So is this trying to say, hey, if yields are this low, it should be good for the housing? Oh, this is just going to be so important. This is something that I put down in my notes already for my webinar tonight. I'd already started discussing it. I'll go a little bit deeper into it. We'll be looking to see maybe the housing, maybe some of these stocks will have a bit of a counter trend bounce. I can only call it a counter trend bounce at this point, because if the economy weakens, I don't think housing is going to actually get strong. So let's just, before we wrap up tonight at, let's go right there. Tonight at 5 o'clock this afternoon, I'm doing my webinar, What's Next for the Market. It's for subscribers, but you'll be able to sign up. It's free, basically, because it's a money-back guarantee. If you're unhappy, you'll just get your money back. So and you'll have 30 days of my newsletter. A very important time, I think, for it. Have a great rest of the day.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.